Welcome to the Adventure Brief, a podcast designed to give you insight into the startup ecosystem. It is brought to you by Edventure, the UK's first student-led venture builder and accelerator, bringing universities' most talented people and ideas together. On this podcast, we speak with established founders, VCs, and Adventure's most successful participants to hear about their journeys and experiences. To find out more about Edventure, visit our website at adventure.vc. Hi guys, thank you so much for coming. We're really privileged to have Stephen Drost here talking to us today about pitching, which is a really important element for all of you guys, whether or not you make it to our final demo day. But beyond that, as you're through your life, entrepreneurs, creating startups, pitching is an essential skill that you're going to need to demonstrate time and time and again. So I'll hand it over to you, Stephen. Thank you again for being here with us today.
Thank you very much, Sarah. Hope everyone can hear me okay. I'll just a couple of people are nodding, so I'll take that as a yes. Just a little bit about myself. I'm Stephen. I work at Codebase. I'm bald with a halo over my head. I'm really sorry for that. I can't avoid it. I work at Codebase. I've been at Codebase for about 4 years or so. Before that, I had 2 startups. One I built and sold. We started with 2 people and we had about 160 employees when I sold it. And I didn't really realize how much of that was just good luck and good fortune. Then I tried to build a second startup and that failed. And that startup took about 5 years to fail. I wish it had taken maybe 3 or so. So have been around building companies and being sort of entrepreneurial for a while. What I currently do at Codebase, I'll just describe Codebase really quickly, I guess. So Codebase is the UK's largest kind of tech incubator. We've got 3 locations, one in Edinburgh, one in Aberdeen, and one in Stirling. Codebase has been around for about 6 years or so now. And we basically see loads and loads of startups, help them grow. We also have a partnership with Barclays Bank. There are these things called Eagle Labs where Barclays tries to help startups grow. They're in 26 cities throughout the UK. So we provide support and mentorship for those different locations. That's London, Liverpool, Manchester, you name it pretty much. So all of that put together means that I get to see probably hundreds basically of startups every year, talk to them a lot. You know, have heard many pitches, have seen many pitch decks and commented on them. So all this to say, entrepreneurial background myself, and continue to play that game. And I guess today I'll be talking for about half an hour, and then we'll open up to a Q&A session for another half hour roughly. But I just wanted to say up front that please feel free to jump in and interrupt if you like, or ask questions at any point of the conversation. Pitch decks. I guess there's 2 parts to pitching. I'll try and talk about both of them. I'll talk about creating a deck a little bit. Then I'll also talk about actually pitching. So I'll start off with the deck creation piece. I guess you guys are all of an age and a kind of digital nativeness that you probably can have Googled a bunch of pitch deck templates. There's all sorts. There's the YC template. There's 500 startups. I've got some Techstars. I've got a whole bunch of content. There are loads of them. I guess what I could add to that about what could a good pitch deck look like is to basically understand that pitch decks are kind of living documents. They're never really done. They're never really complete. You're always kind of working on them. And the narratives are the main kind of headlines for a pitch deck kind of change with the latest trends of investment. And sometimes that can be quite difficult because I like to think of it this way. I don't know how many of you watch the Big Bang Theory, but the, part of the sort of meta storyline of the Big Bang Theory is about having, you know, a kind of theoretical physicist and applied physicist, or sort of experimental person. And if you think about venture capital and startups, it's kind of the same relationship. So think of venture capitalists as theoretical physicists, and think of startups as applied physicists. So startups go out and try some things, work on some stuff, do some experiments effectively, and mostly those experiments fail. But every now and again, some of the stuff works. And that knowledge base of stuff that works, normally the journey for someone who's built a startup like that is when they exit to become a VC. So venture capital is in a weird way a kind of deep kind of sedimentation resource of lots and lots of collective experiences of people trying to build startups that percolates up into some kind of theory building moment. And you build those theories and then you test them against reality again. And then you realize that some things were true and still are true, but you also realize that some things are no longer true. And I just want to say all this, it might seem a little bit far-fetched, but because if you don't really know this and just look at pitch deck templates, you think they kind of exist in isolation, but they're really the result of lots and lots of conversation and exchange of information between venture capitalists and startups. And that's why they also go through so many kinds of fashions and trends and whatever, because the world changes all the time. Sometimes certain types of companies, certain types of startups are more important than others, are more fashionable. So I'm trying to think of stuff that you won't be able to read if you just Google things. Another thing to think of when you're building a pitch deck, and indeed when you're pitching, is that, and you might have come across this, so forgive me if you already have, but when you're building a pitch deck, you're essentially creating a narrative that's trying to address two different human emotions. One of the emotions is fear, and the other is greed. So you're trying to build a narrative that says, don't be scared, don't worry, I'm not going to, you know, set fire to your money. I'm going to do a cool thing here. But on the other hand, you're also trying to ignite people's greed. You're trying to say, see this thing I'm going to build here? I'm going to take the money you're going to invest in me, and I'm going to turn it into a lot more money, giving it back to you. And I mention this because I see people not really being aware of this a lot. And then if you think about it, each of those different emotions and the understanding of those different emotions have completely different consequences. So if you see, pretend you're an investor for a second, you see a pitch deck that's very, very, very clear on anything really. It's obsessed with clarity, and it's trying to say, we're going to build this thing, here are the metrics, this is how much money this is going to turn over by day X, this is how much it's going to turn over by day Y, these are the hires we're going to get, this is how large the total addressable market is, all of that kind of stuff. The more detailed that entire narrative piece is, the more the person who created the pitch deck is displaying that they are concerned with alleviating fear. The more a pitch deck is about a big kind of vision that's big on details as to how that vision is going to play out, how the person thinks the world's going to be, the more you're starting to talk about greed. And if you see an awful lot of pitch decks, as I do, you start to mentally put them into those different buckets. You'll think, well, this person's super diligent and really worried about being truthful and really worried about being accurate and things like that. So they're mostly about trying to convince me that I shouldn't be scared and this is a good opportunity, versus another type of pitch deck that's very big on, I think the world is going to be like this. I think this is a big problem. I think this is the way things are going to move. And I'm not going to sort of be strong on details of accuracy around short money predictions. I'm actually going to go really long on how big this crazy vision is. And I'm saying this, I hope this chimes with some of you, because that's really the difference between an emergent ecosystem and a mature ecosystem. The more mature an ecosystem is, the more confidence it has in expressing big ideas that are all about greed. And the less mature an ecosystem is, the more the players in the ecosystem are all about trying to hold each other's hand and say, don't be scared, this is all going to be okay. So I hope that's something maybe new that you can appreciate. Because the other thing you have to remember is if you're in Edinburgh, if you're in Scotland in a very emergent early stage ecosystem, and you orient yourself by going online and looking at content that was created in San Francisco, then very often that just won't map to the reality here. You might be able to abstract yourself away from being here and pitch to people in San Francisco, and that's totally, it's always been possible. It's mega possible now, certainly in the consequences of what's happening with COVID. But still, just please be aware of that if online and offline realities can be very different and can kind of clash. Okay, so that was just some thoughts on creating a pitch deck. I guess it's 15 minutes now. I'll talk about pitching. The pitching conversation is really, really basic. Try to not be regimented in how you deliver your pitch. Try to be a little bit reactive and cognizant and emotionally intelligent to the situation. So the worst kind of thing, if you've never really pitched before, is that you will go in and be kind of overly focused on the structure of what you've built, often, over agonizing amounts of time, and you've, really polished and changed and, reworked your deck. And sometimes the temptation can be to just take that process and transport it into the conversation. And writing something and speaking to someone are two very, very different levels of discourse, right? And sometimes you can have someone pitch to you and you want to develop a conversation with them, and they just go, no, I'm only on slide 3. I want to get to slide 4 now, please. And that's just, that's not human. We just don't communicate like that. So it's trite, and you've probably heard it many times before, but that is the biggest thing that people get wrong, in the sense that it's not really conducive to developing a conversation. Essentially, that's all you're really trying to do. Again, the big exercise is to imagine you're an investor. If you're an investor, your world is such that your worldview is that you've gone to bigger investors and said, I would like to raise, 100 million, a billion, whatever it is, a whole bunch of capital. And you're essentially saying, see that money, I'm going to rent that money out to founders to invest in them. And the way you make that happen is that you promise those large, normally it's like a pension fund or something like that. You promise those very large institutions that you've got a really good nose for what's going on in the world. You understand what sometimes people call an earned secret. You understand some cool thing about the world that lots of other people don't know. And that therefore you should have this money. And then apart from that kind of secret about the world, that thesis, as they call it, that you're building, you will say things like, so I've got that kind of intuitive or maybe research-based even thesis piece, that kind of secret piece. but I'm then going to use, fairly clever maths to work out how to distribute that money. And essentially that boils down to making as many investments as you can. So the reality for an investor then is that they have to meet as many startups as they can. They just want as much human capital to start, to go to the starting line for this race. Um, and pitch decks and all these things are just tools for them to be able to quickly judge um, who should be at that race, where the race is at, what people understand about it, etc. So if you're an investor, you just go through loads and loads and loads and loads of pitch decks, and then you go through loads and loads and loads and loads of pitches. So what you want is you want to see someone who really cares about what they're doing, who knows about what they're doing, and who can demonstrate that they've got an idea, an opinion of the world, the way things are going. And in that opinion of the world, you have youth on your side, because it, this the younger you are, the more the world is just changing faster and faster, and indeed accelerating in many ways. And you'll just see things that older investors just won't see. So they'll, kind of be like vampires in that sense. They'll just need young people to have a look at the world. So you'll have that level of discourse and that level of communication. But on the other hand, they'll have massive opportunity costs, right? So the time they're taking to talk to company A, they could be talking to company B that may be better. So they're on the hunt for constantly for sort of better lottery tickets, and they want to seize up the lottery ticket, size it up very quickly. So the faster you can communicate your view of the world, that you really, really care, that you're obsessed by this with this problem, that you really want to make a difference here, want to do something, the better it'll go for you. Again, I wouldn't worry that much about the fear part. I would really try, just as an exercise, you got nothing to lose, to try and see how much you can trigger people's greed instead. Fear is always small. Fear is small, short term, etc. Greed is long and huge. So try and position yourself like that, and then really genuinely just try to have a conversation. Have a conversation about have the basics, i.e., the problem, the solution, the team, the go-to-market strategy, the total addressable market size, all that kind of stuff. Have that as sort of table stakes, right? That stuff you need to know. Be well prepared with those kind of things. But thereafter, I mean, for me, that would be like 30% or so, and 70% would be trying to have a conversation. Because when you have that conversation, I don't know, maybe you've read 0 to 1, the Peter Thiel book. What you're doing in the conversation is you're basically proving to investors that you know how to sell, and knowing how to sell is super, super crucial. And like a completely, certainly in our culture, a completely underrated capability. So, come in with like table stakes conversations around, this is our debt, we've agonized over it, it understands all the sort of current popular buckets of conversation, all the stuff I already mentioned. Work on getting that across really quickly, but then try to move the conversation to your kind of superpower place. And your superpower place, and I'm 47 next week, is that you're young. And by being young, you understand the world in a way that older people just don't. And right now, capital knows that it's about to be, the composition of imagine like a big pie chart right now of the economy. That composition is going to change dramatically, right? It's like 15 years ago or so, the biggest companies in the world were natural resource companies, and then some banking and finance, and now it's all just technology. And like Peloton has got a bigger market cap than Ford cars now or something. So there's all these crazy things that are all just based on a future different world. So your superpower is that you kind of say, hey, we're Gen Z or whatever you guys are, and we understand that, and this is how we see the world, and this is how we think the new normal is going to be, or the new kinds of infrastructure are going to be, and we're the people to build it. We're either going to build some stuff that other stuff could be built on top of, or we're going to build some stuff on top of other stuff. Looking at it like that is also a fairly useful way to understand these kind of problem sets, and just have a conversation about that. That highlights that's the one thing you know mostly founders, certainly first-time founders, are super short on experience, and investors will have much more of that. And indeed, you know, you'll have to start looking at investors and saying, should I go with that investor type? Do they have enough experience in my space? Can their experience be mapped across to the particularity of the new thing I'm trying to build? And the investors thinking, can I add my experience to this venture? Can I add some value? And the actual running of the new thing, that you have to sort of really make clear that that's where you will come to shine. That will be the area where you can really make a difference. That's your value add. That's the part of the game that only you can play. And that goes for age. It also goes for gender, for where you're from, for a whole host of things that haven't really featured strongly, but now just do. Thank God. And we'll create new markets and new opportunities. Again, you're wanting to incite people's greed. So that's what I would say with regards to pitching per se. I'm a little bit faster than the half hour, but I'd like to just make this more conversational, if that's okay. So if you have any questions at all, please jump in.
Well, thank you so much. That was great. If anyone has any questions, feel free to just, shout them out or put them in the chat. But to start us off, I'd love to hear about a time like where a pitch blew you away and what was so different about that pitch.
The kinds of pitches that I think are really interesting are ones where the founders. So this is not my story, but it's a much better way. It describes it better than I can. It's stolen from Andreessen Horowitz. And if you're into this game, I'm sure you all know who Andreessen Horowitz are. But they have this concept of an earned secret, and they illustrate the concept of an earned secret by referring to the Airbnb pitch. I don't know if you guys have seen anything around that, but the way it worked was that. Maybe you know this. Airbnb are called Airbnb because they initially wanted to build a business, basically renting inflatable mattresses, like air mattresses, right? And they pivoted like, I don't know, 6, 7 times or something before it became the Airbnb we now know. And what they did was, in order to get to articulating what Airbnb is now, is they had to go back to a time, and this is a super, super interesting thing to do, and maybe you can apply it to whatever you're trying to build. They thought, okay, people have a very strong, clear expectation of what a hotel is, but what was it like in the world before we had hotels? What was that like? And they realized that basically the pre-hotel world was a world of kind of guest houses, and those guest houses literally created the backbone of, I guess, what is called sort of American Baroque or Americana horror or whatever, if you think about it. So basically the idea was, if you went to a guest house, you were always really, really worried you wouldn't wake up the following morning, that someone would kill you in your sleep. So security was really, 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 really difficult, really tough. And back then, the reason hotels came about, certainly the whole kind of, Hilton family and their secret sauce back then was to say, we're going to create an experience where if you come to one of our buildings, it will be identical to the last one you've been to. And you will just feel the consistency of design and message and etc. And all the things we now take for granted and call sort of corporate communication was invented back then by those people that took away people's fear of staying with a stranger, essentially. And Airbnb looked at that and thought, well, what was the driver that made people really scared? And they realized that it was you just couldn't trust the people who you were with if you stayed in a smaller environment. You could trust, and indeed the big corporate machine tried to build that trust by creating this kind of, corporate messaging and consistency of marketing and experience and all of that kind of stuff. And they thought, well, what if we tried to take that trust aspect? Why don't we look at that through a different lens than that sort of big corporate hammer, and instead use technology to do it? So we could have people rate each other or vouch for each other or et cetera, et cetera. And that's your kind of earned secret, right? Because that means someone sat down and really, really, really thought about this stuff, agonized over it, and asked different kinds of questions. And I'm just giving that example because we all know Airbnb and all that kind of stuff. But whenever you see a pitch where someone has not just said, hey, I'm building this thing, it fixes that, and blah, 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 and here's all here's the template of what a pitch deck looks like, and I've gone through it all, and thank you. That if you go away from that and say, this is my strong opinion about how I think the world's going to go with this particular thing, that's when you're on to being really engaging and building a winner.
Well, thank you for that. Jamie has a question.
Hi, Stephen. Thank you very much for the talk. Really great to hear everything. So you mentioned obviously COVID and kind of the move online, and obviously you illustrated, people in Edinburgh might now be able to kind of pitch to investors in, say, San Fran or something like that. It's obviously one of the values that you have in, say, like a startup ecosystem or somewhere down code base is like a lot of like-minded, driven individuals, working in close proximity. And then when it comes to pitching, obviously, you said that entrepreneurs have got to show the investors that they have a passion for what they're doing and they know that. My question is, to what extent do you think COVID will change how things are done in terms of, moving online and video conferencing, or do you think there's always going to be that need for face-to-face interaction in certain situations?
I think there's going to be new opportunities and new stuff, but at the same time, there's also going to be, locally there'll be loads of stuff offline because it's local and because it's more convenient and easier to meet people in the flesh. But I do think that there's going to be, I'll tell you another silly story. So the startup I had that failed, one of the problems, so this is 2010 or 11 or something like that. And back then the CEO of Google was a guy called Eric Schmidt, who's now I think he's the chairman of Google. And he came to Edinburgh because of the festival. He came to give a BBC talk on media, the future of media or something. And we, with my co-founder and I, with our infinite hustle game back then, tried to talk to him, and we managed to get through to his family office. So he's an odd man. If you Google Eric Schmidt, there's some wild stuff you can see, which is you wouldn't think. Just Google Eric Schmidt Burning Man, you'll see what I mean. Anyway, he had a guy who ran his family office, who had run Michael Jackson's family office before that. And this guy was called Court Corsi, or still is called Court Corsi, and he was called Court because he was in court so often. Anyway, this guy said that he would invest in the company we were trying to build, and he wanted to put in like $1 million, and that was at the time, what's roughly now, it was like £700,000, something like that. And he said, I've only got one condition, that you find a local investor who will match that, because I'm in San Francisco, it's too far away, blah, blah, blah. We thought that was great. And, we thought it was like a kind of Willy Wonka golden ticket style thing. But we took a year to be, this is another horrible phrase, yes to death. So being yes to death means someone like no one ever really says no, but you get so many slow yeses that never amount to anything that you die anyway. And we had, you know, someone say, yeah, we'll invest if you can find we just couldn't find a local investor. And the thing I didn't realize at the time was, maybe this is a way to try and answer your question with a slightly sort of sideways view. Locally, everyone was about fear, and in San Francisco, it's all about greed. So yes, you'll be able to pitch a bunch of people internationally, but again, as these international things grow, you know, almost never do you just have one investor. You'll have a bunch, and managing that offline, online, far away, close, etc. That bit's going to be, that's non-trivial. I don't think we've worked that out yet. So there'll be loads more opportunity on the one hand, but there'll just be cultural differences and stuff like that to navigate.
Great point about the cultural differences, particularly when looking for investment. We have a question from Jordan. Thank you for the talk. Would you agree that investors like to feel like opportunists, people who see hidden patterns, etc., and could a pitch use that to their advantage?
Jordan, that's a really, really great question. It's a really deep question. There's an investor, I can't remember his name now, but there's a famous fund called Founders Fund. Have you ever heard of, maybe people heard of Founders Fund? Founders Fund's the most kind of out there libertarian, you know, it's Peter Thiel and the PayPal mafia essentially, built this thing called Founders Fund. So Palantir, all that kind of stuff. There's a guy, I just can't remember his name, but he basically says that he no longer wants to be called a VC. He wants to just be called an investor. And the reason why is that, and this guy's maybe in his 30s, that he just feels that that VCs want to self-actualize by being investors. And he argues that that's simply impossible. And that's a very recent new way of looking at the world. And yeah, it's Founders Fund. Because there is that kind of, hey, I can see hidden patterns. I can see, you know, and I'm so convinced of my weird sort of pattern, you know, seeing thing, that I'm going to put some bets against it and become a billionaire, right? And there's a bunch of people, there's a whole ideology that grows out of that. That's frankly, I could be wrong about this, but I get a sense that it's becoming less popular, to be honest. There's a lot more sort of humility going on at the moment. So to your question, you know, it's about trying to work out, and sadly this just takes lots of error, frankly, trial and error, to work out who's trying to self-actualize, right? Who's trying to show the world and prove to the world that they are a sort of master genius who can work out I mean, if you look at the PayPal mafia, it's really hard to argue. Do you guys know the PayPal mafia? If anyone could just sort of nod or shake their heads. PayPal means a thing. So the PayPal mafia's thing is, hey, you guys might think that it's all just chance and stuff, but there's like, I can't remember the number, there's like 8 or 9 or something of us, and we've gone on to build another 5 or 6 unicorns. So it's not spray and pray. It's actually, you can be good at this or bad at this, and we're actually pretty awesome at it. So, you know, hooray us. There's kind of that going on a little bit. You know, you can either push back on that and say, no, that's nonsense. And the best, you know, another phrase there that is often cited is that there's a lot of rookies who think they're geniuses, and there's a lot of veterans who think they were lucky, which is another sort of correlate to that. Also, I think in a weird way, your generation, I don't know, I don't know if you could give hands up or how many people there or whatever, but do you guys want to be founders or do you want to be VCs?
I believe most people are looking to fund something. So most people here in a team to in a startup essentially. So I can't speak for everyone obviously, but I believe most people will actually want to found something.
But there's definitely a mix. I think Finn's right that majority are probably founders, but I know there's quite a few, particularly on our internal team, who are very interested in the VC side.
Okay, because that's becoming, again, everything's just fashion and fads, and things changing and moving. But there's very often VCs want to be founders and founders want to be VCs. This is sort of strange interplay there. And again, I think there's never been more VCs than there are now, and there's never been more sort of money available in micro funds and rolling funds and all of those different things. So there's an awful lot going on. Maybe it's just like, in a very abstract way to think of it, is like, this game is about taking capital and looking at this new, the big question for me is like, what's the new pie chart of the world? It used to be, as I said, like, here's a bunch of energy and oil and gas and gold and whatever. And now is it, Bitcoin and, whatever, any other kind of phenomenon. And I think that's really interesting. So, and the way we shift that composition and change it is either by being a founder or by being an investor, right? So I think that's that's where that can go. Just looking at some of the comments here. So VC is the ultimate goal for me. Being a founder is a way to be legitimate as a VC. Yeah, no, understood. There's a really good sort of old story from the Valley. I see how true this still is. It basically goes, if you want to be a founder, you go to Menlo Park. Menlo Park's an area where there's lots and lots of VCs, but it's also an actual park. You go to the Menlo Park and you shake a tree until a VC falls down, and you get the money from the VC. You build your thing, you're successful, you exit, you have all this money, and you go, what do I do now? And you just walk back up to Menlo Park and climb up a tree and just wait there until someone comes to shake your tree. So I think that I like the whole applied physicist versus theoretical physicist piece. I think there's an awful lot to that, but it's but there's an awful lot changing there. I think trying to build something and seeing how difficult it is really the valuable thing. Is really the thing that I think pushes you as a human being. This is just an opinion, but and I did it, and so I'm biased as hell. But it's the old cliche thing, but I learned much more by being a failed founder than any other time in my life. It was a massive sort of personal growth moment. So being a founder is definitely a journey. Again, just a quick question. It's difficult. We live in times where everything's just mimetic fragments of just like, this story, here's another story. So just to curate some more stuff. Do people read Paul Graham? Paul Graham, do people know Paul Graham? So Paul Graham started Y Combinator. He's left actually quite recently, I think a year ago or so. And he used to give this talk, the kind of Stanford standard talk. You can Google all this stuff. I'm going to get the details wrong, but it's more or less this, that he sort of go to Stanford and then go to a computer science class and say, okay, who wants to be a millionaire? Everyone put their hand up. And he'd go, okay, there's two ways to do it. You can either, I'm going to get the numbers wrong here, so don't quote me on this. You can either graduate now, join Google and earn like, I don't know, 100K a year. And in 10 years time, you'll have earned $1 million. Or you can drop out now, go and build a startup. It'll probably fail, like 95%, probability that it will fail. I don't know if you guys know this, like the Y Combinator numbers, just because I was talking to someone from Y Combinator a couple of days ago, officially 96% failure rate. So that's a good one to hold on to. You'll probably fail. You won't earn 100 grand. You'll earn nothing. You know, you'll have, he calls it ramen time. You'll just eat ramen all day and have nothing and blah, blah, blah. But you'll either become successful as a startup and become a millionaire in like 5 years, 6 years, 7 years. Or you'll fail once, fail twice, and then you'll join Google, but you'll earn 200 grand instead of 100. So the numbers are slightly off, but it's, you understand where I'm, hopefully where I'm going with that. So that's something to definitely think about, especially if you're, I'm just going to assume you're all a lot younger, because over time, if you kind of VCify your life, if you think about sort of S-curves of where you can go in life, you start to realize, and this, I'm going to say this to you, and you're probably going to go, yeah, but in one ear and out the other. But I wish to God I'd understood this when I was your age. You just start to realize you've only got so many throws of the dice, really, and that's actually the limiting thing in your lives. You're all super smart. You're all, you know, doing what you're doing. You're all, you know, you've built pitch decks, and you know, you've got good heads on your shoulders, all of you. So really, the question is, you know, can you have the confidence and the, you know, fight all your imposter syndrome bullshit and all that to go, hey, I'm gonna try something, and if it doesn't work out, it just doesn't work out, and I'll go again, and then I'll go again, and I'll go again, and at some point you'll realize that you've only got another 5 goes or 3 goes, and at that point you might go, you know, I've built up this massive sort of reservoir of experience, and I can do all this stuff, so I can maybe go into something that's already scaled, or I'll join Stripe or something like that. But on the other hand, you know, one of these things might work, but you know, there's so much talk of anti-fragility and resilience and all that kind of stuff, but genuinely, you know, give yourself a couple of goes at stuff that probably won't work. Just, you know, the stuff you'll learn, again, it's just an opinion, the stuff you'll learn at that is super valuable. And again, that can also flow into, it's a very delicate thing, but you want that to flow into your pitching as well. You don't want to stand there and go, hey, I'm just this experimental physicist who doesn't give a shit what happens. But you want to go, look, I've got these ideas and I really want to give this a go. Because the worst, you know, all investors want you to do is really try hard to do something with that money. Like if you just keep it and go, well, we're not going to, again, that's the fear thing. You want to go, we're gonna try this thing. I'm really going to go for it, and the stuff you'll learn will be massive. And you can get that across. Again, Sarah, to your question, that's one of the things that wows people. People right now, investors, want to see people who've got some hustle and want to try and do stuff.
I had one more question. You were also like talking about the failure rate of startups in general. So what would you say, you who has seen like hundreds of startups, as you said, fail and succeed, are there any like recurring themes or characteristics of startup that you have seen that distinguish a succeeding startup from a failing startup?
Look, there's a lot of luck. There's a lot of I could give you a lot of sort of platitude stuff. One thing that I genuinely think is underrated is, I don't know how many of you are technical founders versus non-technical founders, but getting a technical co-founder or having some kind of technical awareness is super important if you're building software stuff. If you're a non-technical co-founder and just think you can outsource it or treat it as a non-important kind of trivial easy thing, that's just not true. So getting someone who can code really quickly is massively interesting. And again, I wish people, you really need to realize all that Y Combinator stuff, all these kind of like cool things, all those, that was written for, it was mostly written by people who were in Google or Yahoo or, people who could code. And not only could they code, they were really good at it, and all their friends were really good at it too. So there's a normalization of being able to do things fast. So quick execution, understanding the ecosystem, understanding the environment around you, having a strong opinion, even if it's wrong, but having an opinion on the way the world is going, is really crucial. And then another thing again, which took me years to bloody work out, and I still can't really apply it properly to my life. But one of the main things is having strong opinions loosely held, and again, this is going to sound silly, but falling in love with the problem, not falling in love with the solution, is super crucial. It's probably the most important thing, because and again, in your pitching, if you get that across and say, people are really, there's a weird, so I could be wrong about this, but in my generation, certainly there was a weird fear of saying to people, hey, this thing I'm going to build, it's going to be this now. I know exactly what it is. It's never going to change. It's never going to iterate. I'm not going to pivot. None of that. And it's going to be brilliant. And in year 4, in month 3, we're going to make that much money. That's all complete fantasy nonsense. Like, it just never ever happens like that. So there's an old Chinese saying that you cross the river stone by stone. That's kind of the thing. It's really hard to pitch that, right? It's really hard to say, yeah, I've got a vague idea of a good thing. I think it's kind of like this, but that's just our MVP, and we're going to test it, and we're totally happy to pivot, and we'll go wherever the market's going to take us. We're just on the hunt for product market fit. You can only start to really say that to really experienced investors, and locally we just don't really have that, to be a little bit brutal. So you're looking to cultivate that and to try to advance those kind of conversations, but at the same time, demonstrate that you really want, this to work out. You're not just there to play with people's money.
Thank you. I'm very conscious of the time, so I'll limit it to the last 2 questions. Jordan had a follow-up question. I'm curious about your experience with investors. What kind of stereotypes have you noticed, and any ways to deal with them?
So I think there are so many really great investors now. So one of the things that's happening with great investors, so if you look at, like, I don't know, like Brad Feld from Techstars, or Christoph Jantz from Point 9 Capital, there's a whole bunch of people who have created so much content around good practice and good behavior that it's really hard for, sort of local, certainly local kind of bad behavior from VCs. And there used to be tons of that. So, and that's really not happening anymore. So the stereotype, it's difficult because everyone reads the same, the world's so mimetic. Everyone reads the same blog posts and stuff. I like someone like, I can more or less spoof, like I could spoof knowing much more than I actually do. Maybe I'm doing a little bit of that now, because we can just all read stuff, right? And if we're into it, we can do that, for better or for worse. So I think sometimes there's investors who often you'll see that, and this is a very European thing, that we just haven't had that many unicorns. We don't have a, massively mature ecosystem. So very often the, I don't know, companies like Skype or Spotify or something like that, those founders will have totally outgrown their first investors. Do you know what I mean? So if the first money they raised would have been in Europe, and I was at an event in there's a thing called SaaStr, which if you want to build a SaaS company, really have a look at Jason Lemke and SaaStr. It's like amazing content. I was at SaaStr and it's this amazing, really recommended sort of event. I was in Paris last year, and there was a bunch of VCs interviewing founders, and they had been, because they're all European, they had been the first VCs they had, and the founders had completely outgrown them. And it was really hard to see the clash of ego, and people were like, oh, you're a unicorn now, but do you remember your first £250,000? It came from me, because I knew that there's a bunch of stuff there that was really difficult. So that stuff is hard, but I think the stereotypes are, I think there's so much content, and we all just read stuff, and it's about how credible are people, how much have they actually experienced versus how much are they kind of spoofing, and how much did they read or just sort of to make up that gap of experience.
Just one follow-up question with regard to investors. Do you actually think that, because we're talking about investors being able to see hidden patterns, that successful investors actually see hidden patterns, or would you say that success is largely determined by the exposure to startups they have, or the capital and resources?
I don't know. It's a really good question. It's a really hard one to answer. I think there's a view that VC is probably a kind of boutique business, that some people are really good at it, but they're probably, I don't know what the success rate is, but VC as an investment class is probably not as successful as it pretends to be. It's certainly, again, VCs, because it's part of their game to generate as much deal flow as possible, to make as many people start up as possible, their marketing message is completely different to, say, a bank or a hedge fund or something like that. It's just, so it seems much more approachable and much more, et cetera, et cetera, et cetera. But you've probably got, Y Combinator, Andreessen Horowitz, Techstars, whatever. You'll all know these companies yourselves. That will probably be a long tail, right? They'll have the best bit of what the market's doing. So I think, though, that's changing a lot, and I think there's going to be more and more. There's just going to be more and more money and more ways to do it. In fact, if you talk to sort of really clever clogs people who are in this sort of San Francisco ecosystem, they're all saying that it's kind of flipping around there. So instead of VC getting to pick companies are getting to pick VC, just because it's the ratio's flipped. So yeah, it's not a great answer to your question, but it's a hard question. So any other questions?
Sorry, my computer froze. I was trying to unmute. So my final question, and this might be a bit of a difficult one to sort of wrap up on, but I think generally we can say that the European market, particularly as you've touched upon, is a lot more conservative in terms of investment than compared to the US, particularly as A, student founders, and B, looking at things like from a seed stage point of view. What's the best way to sort of get around that? And you touched upon making sure that you're aware of cultural differences when you're pitching. Pitching within the UK, what would you say are key points to be aware of and capitalize?
So pitching within the UK is basically, where are you pitching? So there's a big conversation around local maxima, right? So London's obviously, you'll have much more experienced investors there than you'll have in other places. So I guess working out if you're pitching to an angel versus a VC, working out who you're talking to within a VC firm. So there's associates, there's lots of different levels of people that you can talk to, and then just really the bigger thing, though, is really trying to wrap your head around the fear and greed piece. So the fear and greed piece is taking me, I've not done a particularly brilliant job at articulating it tonight, but I've been trying to express that for a while, because that's the biggest thing I see, the biggest trend I do see. So an angel would, again, the smaller it is, here's the weirdness about it. The smaller something is, the more equity the person will probably want, and the more worried they'll be about how this thing will work. So if you think about it, if you say, hey, I'm going to build a bakery tomorrow, do you want to invest? Someone will go, okay, let's go 50-50. Or, you start to say stuff like that. You don't go, okay, I'll take 7% for, we'll do a convertible note and blah, blah. You're just not going to do that. So the more, but at the same time, it's much easier to express what a bakery is, right? You go, oh, we make bread and all stuff like that. So the harder something is to articulate, weirdly, the more it has to be greed focused, and the easier something is to articulate, the more it's about, like, there's a capped upside almost, right? So you're like, you want to get into a game where you've got an unlimited upside. You want to I can really, if you haven't already done it, I can really recommend understanding Peter Thiel on this. He's just an incredible thinker on it. Understanding what he means when he talks about monopolies and things like that. So that would be the answer, Sarah. Just looking at understanding that fear and greed piece, and then trying to very quickly see, when do I have to say things that are about catering to someone's fears, and when do I have to start saying things that are about greed? And again, the more you sort of swim around different areas, the more you'll start to see where these things lie.
That's a really great point. Thank you so much for answering that. We're just going to wrap up. I think we have one last question, but I think we can make this a yes or no question if possible. Just Jordan wanted to ask, I noticed you mentioned your failed startup in your LinkedIn bio. Does talking about your previous failed startups openly make a good impression? I know we don't have much time to go into that.
No, okay. Let me say one sentence on that. So I do that very purposely, and it's not to make a good impression, really. Maybe it is, but it's more about, I would like to be able to do that in this ecosystem more often, more easily. And I think probably it's a generational thing, to be really honest. People are going, it's just ridiculous that we live in a world where there's like 95% failure or 96 or whatever it is, and yet everyone, again, a non-experienced ecosystem always tries to pretend that everything that happens was a great success. It's just not the case. So I'm always trying to sort of destigmatize somehow or whatever. But that's why I try and do that, and I hope to God that does come across, that I'm not just doing it to curry favor or to make a good impression. It's really just to go, let's just jump over that bit of the conversation. Like, we don't have to pretend to each other. So, but again, I think that's probably, I hope that's changing a lot with different age groups.
That's a really great point, and I really hope more people take your example and destigmatize that, because as you've mentioned, actually failure is really important in that learning process. So I won't take up any more of your time. Thank you so much for coming to speak with us today. That was really invaluable. I'm sure everyone else in the cohort will agree.